Exercise 2.8. The following information relates to Gloria Traders. Required. 2.8.1. Analyze the given transactions under the headings on the given answer sheet. Information. The following transactions must be analyzed. Transaction 1. The owner, T. Palsis, starts a business with a capital contribution of 500,000 Rand, which he deposits in the bank account of TP Traders. Number 2. The original capital contribution appears to be insufficient and a further loan of 60,000 Rand is obtained from ABSA. Number 3. A payment via EFT was made to AA Traders for the following: 2 cash registers at 1750 each, shelves for the store 4,500 Rand, and a safe 2,000 Rand. Number 4. Stationery was purchased on credit from BB Stationery, 8,000 Rand. Number 5. The trading license is paid via EFT, 1,800 Rand. Stationery to the value of 1,700 Rand returned to BB Stationery. Inventory is purchased via EFT from DD Suppliers, 59,000 Rand. Number 8. Goods sold for cash for 13,230. A profit margin of 35% on the cost price is maintained throughout on all stock sold. Number 9. Received an amount of 1450 for services rendered. Number 10. The owner took an amount of 500 Rand via EFT for personal use. Number 11. 200 Rand was withdrawn at an ATM and given to the petty cash cashier as petty cash impressed amount. Number 12. Rental for the month amounts to 5,800 paid via EFT. Number 13. Services rendered to clients J. Marais, which she will pay later, 240 Rand. 14. A withdrawal of 500 Rand was made at the ATM for the cash float in the cash registers. Number 15. Postage fees paid from petty cash, 21 Rand. Number 16. Goods sold on credit to a debtor, Kayful Yun, 3780. Number 17. 67 Rand paid out of petty cash for delivery of goods to Kayful Yun, amount to be added to her account. Then number 18. Goods to the value of 486 was returned by Kayful Yun. 19. Made an EFT payment to BB Stationery for 2,000 Rand to partially settle our debt. 20. Paid wages for petty cash 30 Rand. 21. Received an EFT payment of 500 Rand of a debtor or Root to settle a portion of his debt. Number 22. The petty cash cashier indicates that he has only 45 Rand left in the petty cash at the end of the month. Withdraw an amount from the ATM to restore the petty cash impressed amount. Number 23. Loaded an EFT to a creditor, Human Stores, to settle our debt of 2,100. 24. Repaid 5,000 Rand via EFT on the loan from ABSA. Number 25. Purchased inventory to the value of 5,000 Rand from FF Stores and paid via EFT. Since we buy the goods to be sold again, 5% trade discount is allowed. Number 26. The cash float of each cash register is decreased with 50 Rand. This money is deposited in the current bank account. 27. Paid the telephone account via EFT, 1,900 Rand. 28. Issued a receipt to N. Nigel, a debtor, for 2,300 Rand as repayment of her debt of 2,500 Rand. 29. The bank sent us our monthly bank statement, which indicates that the service and electronic banking fees for the month amounted to 278. And the last transaction on the 30th, paid 5,600 Rand via EFT to HH Traders, a creditor, as settlement of our debt of 6,000 Rand. Let's read the transaction on the first. The owner, T. Palsis, starts a business with a capital contribution of 500,000 Rand, which he deposits into the bank account of TP Traders. So if the owner contributes capital, we know our two accounts will be bank and capital. And we are depositing money into our bank account, so it will be our cash receipts journal. So our source document is directly, so it's a bank statement. Our subsidiary journal is CRJ. Our account debited is bank. Our bank balance will go up because we're receiving money. Capital will be credited. It's an owner's equity income account that gets credited. 500,000 in the credit column of equity and 500,000 in the debit column of assets. Number 2. The original capital contribution appears to be insufficient and a further loan of 60,000 Rand is obtained from ABSA. If you get a loan, your one ledger account will be loan ABSA and you will receive the money in your bank account, so your other account will be bank. So journal involved is CRJ. Our source document is our bank statement. Bank will be debited because we're receiving money. Account credited will be loan ABSA. 60,000 Rand in the credit column of liabilities and 60,000 Rand in the debit column of assets. Number 3. A payment via EFT was made to AA traders for the following. Okay, this will involve a calculation. You are buying 2 cash registers, 1750 each, so that's 3,000 Rand. Then shelves for the store of 4,500 Rand and a safe of 2,000 Rand. That gives you a total of 10,000. So we classify this as equipment and we are making a payment, so it will be CPJ and our source document is EFT. So source document is EFT, our journal is CPJ, account to be debited is equipment, account to be credited is bank. They are both assets, so it will be 10,000 in the debit as well as 10,000 in the credit column of assets. Okay, then transaction number 4. Stationery was purchased on credit from BB Stationery, 8,000. So we are buying stationery on credit. So we'll open an account called Creditors Control, and that is recorded in our Creditors Journal, and we will be issued a credit purchase invoice. So our source document is CPI. Our journal is Creditors Journal. Stationery will be debited. Creditors Control will be credited. Stationery will be debited in the equity column with 8,000 Rand and 8,000 in the credit column of liabilities. Our liability is increasing because of the stationery purchase on account. Then number 5. The trading license was paid via EFT, 1,800 Rand. So we're making a payment, so we know it's our cash payments journal. It's an EFT as our source document. We are paying for our trading license, so trading license will be debited. Bank will be credited. Trading license will be debited in the equity column of 1,800 Rand because it's an expense and expenses are debited. And our assets will be credited with 1,800 Rand. We are taking money out of our bank account, so our bank account is going down. Our balance is reducing, so it's credited. Then number 6. Stationery to the value of 1,700 Rand returned to BB Stationery. Now, BB Stationery is one of our creditors. We are doing a return, so we know that our journal involved is a creditor's allowances journal, and we always get given a duplicate debit note. So my journal is CAJ. Duplicate debit note is my source document. Account to be debited is Creditors Control. Account to be credited is stationery. 1,700 Rand in the credit column of equity, and 1,700 Rand in the debit column of liabilities. Our liabilities is reducing because of the return of stationery. Then number 7. Inventory was purchased via EFT from DD suppliers, 59,000 Rand. We are purchasing inventory for cash, so our journal involved is CPJ. Our source document is EFT. Inventory will be debited. Bank will be credited. They are both classified as assets, so it will be 59,000 in the debit column of assets and 59,000 in the credit column of assets. Number 8. Goods sold for cash, 13,230 Rand. A profit margin of 35% on the cost price is maintained throughout on all stock sold. So we need to know by now, when a sale takes place, we're recording two prices, the selling price as well as the cost price. Let's go do the entry for the selling price. We're receiving money, so our journal is cash receipts journal. It's CRR because it's a sale. Account debited is bank. Account credited is sales. Then we record our selling price given to us as 13,230. So equity will be credited with 13,230 and assets will be debited with 13,230. The second transaction involves your cost price. To determine your cost price, there is a formula. You take your selling price, you times it by 100, and you divide it by your 100 plus your markup percentage. This time they gave you your markup percentage, so you didn't have to calculate it. So you're going to say 13,230 times 100 divided by 150 gives you 9,800 Rand. So your journal involved is the same, CRJ and CRR, so that doesn't change. Your account debited is cost of sales. Your account credited is inventory. 9,800 in the debit column of equity, because cost of sales is an owner's equity expense, which is debited. And 9,800 in the credit column of assets. Number 9. Received an amount of 1,450 Rand for services rendered. Services rendered is called current income. So our journal is CRJ, we're receiving money. CRR is our source document. Bank will be debited. Current income will be credited. 1,450 in the credit column of equity, because it's an owner's equity income, which is credited. And 1,450 in the debit column of assets. Our bank is receiving money, so it is debited. Then number 10. The owner took an amount of 500 Rand via EFT for personal use. Personal use is classified as drawings. We are making a payment, so our journal involved is cash payments journal. EFT, because it was directly from the bank statement. Account debited is drawings. You don't have an account called personal use, it's called drawings. Account credited is bank. 500 in the debit column of owner's equity and 500 in the credit column of assets. Number 11. 200 Rand was withdrawn at an ATM and given to the petty cash cashier as petty cash impressed amount. So we are going to use our CPJ journal because we're making a payment. We drew cash from an ATM, so my source document is ATM. Account to be debited is petty cash. Account to be credited is bank. It will be 200 in the debit and credit column of assets, because they are both classified as asset accounts. Then on the 12th, rental for the month amounts to 5,800 Rand paid via EFT. So I'm making a payment, so my journal is CPJ, my source document is an EFT, rent expense is the expense account that I'm paying, account debited is my bank, equity will be debited with 5,800 Rand, and bank will be credited with 5,800 Rand. Number 13. Services rendered to client J. Marie, which she will pay later 240 Rand. If a client pays later, it means it is a credit sale that's taking place, so it's a debtors control account, and it's for services rendered. So services rendered is a current income. So my journal involved is DJ. My source document is my duplicate credit sales invoice. My account to be debited will be debtors control. You can also in brackets write the name of the debtor, Marie, if you want to. My account credited is current income. 240 Rand in the credit column of owner's equity, and 240 Rand in the debit column of assets. Then number 14. A withdrawal of 500 Rand was made at the ATM for cash float in the cash registers. So I'm withdrawing 500 Rand, so I'm making a payment, so my journal is CPJ. Again, I'm withdrawing it cash from the ATM, so my source document is ATM. Cash float will be debited. My account credited will be bank. They are both assets, so it's 500 in the debit as well as 500 in the credit column of assets. Then number 15, postage fees paid from petty cash 21 Rand. So now my journal involved is my petty cash journal. My source document is my petty cash voucher. My account to be debited is stationery. Postage is classified as stationery. My account to be credited is petty cash. 21 Rand in the debit column of equity, and 21 Rand in the credit column of assets. Transaction 16, goods sold on credit to a debtor Kfil Yun 3780. This time a sale is taking place, but it is a credit sale of stock. So we are going to have debtors control and sales as our first entry, and cost of sales and inventory as our second entry. Remember, when it comes to a sale, we always record two prices. Our journal this time is our debtors journal, and it's a duplicate credit sales invoice. It will be the same source document and journal for both transactions. The account that we're going to do first is the selling price account. So this time we're going to debit debtors control, and we are going to credit sales with the selling price, so 3780 in the credit column of owner's equity, and 3780 in the credit column of assets. Then we've got to work out our cost of sales, so we're going to use our cost price formula. We're going to say selling price times 100 divided by 135. So our selling price given to us is 3780. You're going to times it by 100, divide that by 135, and then you get a cost of sales price of 2,800 Rand. So cost of sales will be debited, inventory will be credited, 2,800 in the debit column of owner's equity, and 2,800 in the credit column of assets. Number 17. 67 Rand paid out of petty cash for delivery of goods at Kfil Yun. Amount to be added to her account. So Kfil Yun is a debtor, and you're paying out of petty cash, so you must add it to Kfil Yun's debtors control account. So it will be petty cash journal, petty cash voucher, account debited is debtors control. You can in brackets say Kfil Yun. Account credited is petty cash. 67 in the debit and credit column of assets, because they are both asset accounts. Then the 18th. Goods to the value of 486 was returned by K4Yun. Now, K4Yun is a debtor that returned goods, so we know we're going to open debtors allowances and debtors control, and our journal involved is debtors allowances journal. The source document is a duplicate credit note. Again, it will involve two prices, first the selling price and then the cost price. So account to be debited for the selling price is debtors allowances. The account to be credited is debtors control. 486 in the debit column of equity and 486 in the credit column of assets. The second transaction is our cost price. We're first going to have a calculation for our cost price. You take your formula, which is selling price times 100 divided by 100 plus markup. So in this case, it's 486 times 100 divided by 135, and then you get your cost price as 360. Cost of sales and inventory go hand in hand. So inventory will be debited, cost of sales will be credited, 360 in the credit column of equity and 360 in the debit column of assets. Then on the 19th, made an EFT payment to BB Stationery for 2,000 Rand to partially settle our debt. So we're making a payment, so it's cash payments journal is the journal involved. It's an EFT. We're paying our debt off, so we're paying one of our creditors off. So the account to be debited is creditors control. You can write the name of the creditor BB Stationery in brackets. The account to be debited is bank. 2,000 Rand in the debit column of liabilities and 2,000 Rand in the credit column of assets. Then number 20, paid wages from petty cash. So we are making a payment out of petty cash. So that's our petty cash journal that's involved. Our source document is a petty cash voucher. The account to be debited will be the expense account wages. The account to be credited is petty cash. 30 Rand in the debit column of equity and 30 Rand in the credit column of assets. Number 21. Received an EFT payment of 500 Rand of a debtor, Arut, to settle a portion of his debt. So Arut is a debtor, so we're going to open debtors control and bank. We're receiving money, so our journal involved will be our cash receipts journal. The source document will be our duplicate receipt. Account debited is bank. Account credited is debtors control. And 500 Rand in the debit column of assets as well as the credit column of assets. Number 22. The petty cash cashier indicates that he has only 45 Rand left in the petty cash at the end of the month. Withdraw an amount from the ATM to restore the petty cash impressed amount. So because we're going to the ATM, our source document will be our ATM slip. Our subsidiary journal is a CPJ because we're making a payment. Petty cash will be debited. Bank account will be credited. And they are both assets, so it's 155 in the debit as well as the credit of assets. Number 23. Loaded an EFT to a creditor, Human Stores, to settle our debt of 2,100 Rand. Now, Human Stores is a creditor, so we're going to open creditors control. We are paying our creditor, so it's a payment from our cash payments journal, and our source document will be an EFT. So subsidiary journal is CPJ, source document is EFT, account debited is creditors control. You can write the name of the creditor in brackets, Human if you want to, Human Stores. Account credited will be my bank account. 2,100 in my debit column of liabilities. My liability is decreasing because I'm paying my creditor. settling a bit of my debt that I owe towards them. And then assets will be credited with 2,100 Rand. Number 24. Repaid 5,000 Rand via EFT on the loan from ABSA. Remember the previous transactions above, we opened a loan with ABSA. Now we are repaying a bit of that loan back to the value of 5,000. So it's a cash payments journal. EFT will be my source document. Loan ABSA will be debited. My bank account will be credited. My liability will decrease with 5,000, so it will be debited. And assets will be credited with 5,000. Number 25. Purchased inventory to the value of 5,000 Rand from FF stores and pay via EFT. Since we buy the goods to be sold again, 5% trade discount is allowed. Now remember, when we have a trade discount involved, we always show the amount after the trade discount. So to calculate the trade discount, you're going to say 5,000 Rand times 5% to get the discount. Once you've got the discount, you subtract that from 5,000 Rand, which is 250 Rand. Or you can just say 5,000 times 95%, because we're not paying the full 100%, we are only paying 95%. Then the answer is 4750. So our journal involved is our CPJ journal. Our source document is our EFT. The account to be debited is inventory. The account to be credited is bank. And they are both assets, so 4750 in the debit as well as the credit column of assets. Then number 26. The cash float of each cash register is decreased with 50 Rand. The money is deposited in the current bank account. Now you've got to ask yourself again, how many cash registers did we own? We owe 2. So we're going to say 50 times 2 is 100 Rand. So our journal involved is our cash receipts journal. It's directly from the bank statement. Account debited is bank. Account credited is cash float. And they are both assets, so it will be debited and credited in assets 100. How did we get the 100? It's 50 times 2, because we have 2 registers. Then on the 27th. Paid the telephone account via EFT, 1,900 Rand. We're making a payment. So our journal is CPJ. Our source document is EFT. The expense that we're paying is telephone. Our account credited will be bank. The account debited was telephone. 1,900 Rand in the debit column of equity. And 1,900 Rand in assets in the credit column. Number 28. Issued a receipt to Nagel, a debtor, for 2,300 Rand as repayment of her debt of 2,500 Rand. So 2 transactions is taking place. Firstly, we have to record the payment of the debt. But then, because she's settling in full, we're getting a discount. 2,500 minus 2,300 gives you a difference of 200 Rand, and that is the discount allowed. So let's just first record the payment that we made towards, that the debtor made towards us. So the journal involved is a CRJ, and it's a duplicate receipt. That is the same source document and journal for both transactions. The first transaction, you're going to debit bank, and you're going to credit debtors control. They are both assets, so it's going to be 2,300 Rand in the debit, as well as the credit column of assets. Then the second transaction is recording the discount. We worked out that's 200 Rand. It's 2,500 minus 2,300 gives you a difference of 200 Rand. We are receiving, the discount is given because we settled the amount in full. So the account to be debited is discount allowed, and the account to be credited is debtors control. 200 Rand in the debit column of equity and 200 Rand in the credit column of asset. Number 29. The bank sent us our monthly bank statement, which indicates that the service and electronic banking fees for the month amounted to 278 Rand. Those two fees are called bank charges. So we are making a payment, so it will be our CPJ journal. Our source document is our bank statement. The account to be debited is bank charges. The account to be credited is bank. 278 in the debit column of equity and 278 in the credit column of assets. And then our last transaction, number 30, paid 5,600 Rand via EFT to HH Traders, a creditor, a settlement of our debt of 6,000. So once again, we are settling our debt with our creditor in full. Because we are doing that, they are giving us a discount. So 6,000 minus 5,600 is 400 Rand discount. So this transaction will involve two entries. Let's first record the amount that we settled. Our journal will be our CPJ because we're making a payment towards our creditors, and it will be EFT. That is the same source document for both transactions. The first transaction, when we record the payment to our creditors, our account to be debited is creditors control. Our account to be credited is bank. 5,600 in the debit column of liabilities. And 5,600 in the credit column of assets. Now let's go and record the discount received of 400 Rand. The account to be debited is creditors control. The account to be that was the account to be debited. The account to be credited is discount received. 400 Rand in the credit column of equity and 400 Rand in the debit column of liabilities. Our liability is reducing by the 400 Rand discount. And now we have come to the end of exercise 2.8 and also to the end of chapter 2.